Hello, welcome to the weekly technical analysis review for Monday, January the 20th. I'm Rafi Baijan at xm.com, and the pairs we're going to be looking at for this week are the Euro Yen, the Aussie Dollar, and the Euro Pound. So let's start first with Euro Yen. Looking at the momentum indicators, it's a bit of a mixed picture with the stochastics pointing downwards, the RSI flatlining but still in positive territory, so it's more or less a neutral to bearish picture in the very near term. If the negative mood continues, prices could soon reach the 20-day moving average at 121.72. If that support is broken, Euro Yen could then target the 50-day moving average at the 121 handle. Now, we did see a bullish cross between the 50 and 200-day moving averages in recent days, and the uptrend that started from back in early September is still intact, but it's too soon to say whether or not this uptrend will last, given how close price action is to its moving averages. To the downside, below the 50-day MA, another key support is the 23.6% Fibonacci retracement of the long-term downtrend from 133.12 to 115.85. So that comes in at 119.93. But a more critical one, whether or not the current uptrend will stay intact, is the swing low from November of 119.25. To the upside, if we do see prices bouncing off the 20-day MA, we could then see a retest of that 6.5 months peak of 122.86 earlier this month, and then higher up we have the 123.65 level, a previous resistance barrier, and then above that we have the 50% Fibonacci at 124.49. Let's now turn to the Aussie dollar pair. Again, not looking very positive in the short term. Stochastics are heading towards oversold territory. The MACD just holding in positive territory above zero. We do, though, have very strong support coming at the 61.8% Fibonacci retracement of the downleg from 0.69 to 29 to 0.6753, so that is at 0.6862. So if that support fails, prices would soon test the long-term descending trend line. And then if that trend line is broken to the downside, the weak uptrend would be in danger, and if prices head towards the swing low from November of 0.6753, we could see the medium-term picture turning bearish once again. If though prices do bounce off the current immediate support around the 50-day MA, the first hurdle to the upside is the 78.6% Fibonacci at 0.6891. Above that, we've got an important resistance around 0.6930. So that had been tested several times before and only managed to break above it when we had that strong rally at the end of last year. If that is cleared as well, then that peak from the end of last year, the 5-month peak of 0.7031, that would be the main target for the bulls, which is needed in order to resume that uptrend which started back in the autumn. Our final pair for today, looking at the Euro Pound. So Euro Pound did tumble towards 3-year lows at the end of last year before rebounding, but then since then prices have been drifting sideways. They have now entered the Ichimoku cloud, so that confirms the neutral picture in the short to medium term. The RSI also supports this, having flatlined just above 50. Looking at the stochastics, the very near term picture though is somewhat negative, so the risks are to the downside. Prices are struggling to hold above the 50-day moving average in the region around 0.85, just above the bottom of the Ichimoku cloud. So if prices were to drift below that support zone, it would risk shifting the short-term to medium-term picture to a more bearish one, with support then coming at the 23.6% Fibonacci at 0.8451. So that's the Fibonacci retracement of the down leg from 0.9019 to 0.8276, and then below that, that 3-year low of 0.82 to 76 would be back in scope, and breaking that would signal a resumption of the long-term downtrend for euro pound. If the prices manage to clear the hurdle that we have around the 38.2% Fibonacci at 0.8560, that would give the pair a bit of a boost, and then the pair might be able to challenge the 50% Fibonacci at 0.8647. That's another important resistance barrier. We can see that was a critical resistance area back in October. If that is cleared, it would take prices above the Ichimoku cloud, and we would see a strengthening of the positive picture, and then higher up, the next target would be 0.8778. So that's it from me. Thank you very much for watching. Have a great day.